If you talk to anyone about the real estate market lately, you probably heard the same question over and over again. Are we heading for a crash, a correction, or a comeback? Buyers are waiting for prices to drop. Sellers are wondering why the market feels different than it did a few years ago. And almost everyone is watching to see what the Federal Reserve does next. And of course, everyone has predictions. So let's cut through the noise. As we head into 2026, I'm sharing my housing market outlook for the next year. We'll talk about what is happening nationally, what the experts are forecasting, and how all of this actually shows up in Hunterdon County and the areas I serve. I've helped hundreds of families buy and sell homes throughout New Jersey, and in 2026, it's shaping up to be a year defined by adjustment, opportunity, and smarter decision-making. Make sure you watch through to the end because there's one major factor in 2026 that could flip every prediction upside down. If you're new here, I'm Malone with the Luxe Service Real Estate Group at Coldwell Banker. My team and I help people move in and around Hunterdon County and neighboring towns, and every day we're having real conversations with buyers and sellers trying to make sense of this market. If you're thinking about a move or just want to understand what your home might be worth right now, you can reach out anytime. Call, text, email, whatever is convenient for you. Now let's talk about where we actually are. Past few years have been marked by the same major theme nationwide. Fewer home sales, rising inventory, and mortgage rates that have felt like a roller coaster. Back in 2022, rates rose incredibly fast, and that created two major issues. First was affordability. For every 1% increase in interest rates, buyers lose roughly 10% of their purchasing power. Going from 2.5 or 3% rates to 7.5 or 8% pushed many buyers to the sideline. The second issue was the lock-in effect. About 80% of American homeowners are sitting on a 30-year mortgage rate below 5%, many locked in around 2.5 to 3%. Even homeowners who wanted to move looked at today's rates and said, no thanks. As a result, both buyers and sellers slowed down. Existing home sales have been running around 3.9 million, the lowest level since 2010. Before the pandemic, we averaged about 5.3 to 5.4 million. And here's a wild stat. In early 2025, only 28 out of every 1,000 homes changed hands, the lowest rate since the 1990s. Over the past year, though, sellers have been re-entering the market faster than buyers. Every month since January 2024, new listings nationally have outpaced pending sales. Investor activity has added even more inventory, accounting for 10.8% of all home sales in 2024 and 11% in 2025. That's why active listings are now up roughly 25 to 30% year over year. More inventory has given buyers more breathing room. Days on markets are up 17% year over year. About 42% of homes have price reductions. Unsold listings pulled off the market are up 35%. Even with all of that, national home prices are still up about 2.1% year over year. Some markets have seen declines, like Tampa down 6.2% and Austin down 6%, while others, including Hunterdon County, continue to show resilience. Mortgage rates spent most of 2025 between 6 and 7%, averaging around 6.75, with recent dips closer to 6.2. The Federal Reserve cut rates twice in 2025 in September and October, bringing the Fed funds rate to roughly 3.75 to 4%. Mortgage rates actually begin easing before those cuts since they're more closely tied to the 10-year Treasury yield that the Fed's benchmark rate. So what about 2026? Are we heading for a crash? Most experts say no. Forecasts suggest mortgage rates will remain elevated but gradually decline. Zillow expects rates between 6 and 7%. The Mortgage Bankers Association projects 6.4 to 6.7. Fannie Mae is more optimistic at around 5.9. Wells Fargo predicts roughly 6.23. A large survey of more than 100 economists put rates in the high fives to the end of 2026. Most predictions land somewhere between 5.7 and 6.7%. Inventory in 2026 is expected to grow modestly, about 5 to 10%. More locked-in sellers are likely to finally make moves. Builders will continue adding supply, and baby boomers are beginning to list homes in greater numbers. Home sales are also expected to rise. Wells Fargo estimates 4.27 million transactions. Fannie Mae projects 5.16 million, nearly a 10% increase. The National Association of Realtors expects existing home sales to climb 14%, with new construction sales rising about 5%. Home prices are where opinions start to diverge. Zillow predicts about 1.9% appreciation. Fannie Mae forecasts between 1.1 and 2.8%. Wells Fargo expects closer to 3.5%. The Mortgage Bankers Association sees prices staying flat or dipping slightly. A major economist survey points to about 2.1% growth. Some forecasts suggest small declines of 2 to 5%, but not a crash. The general consensus is that 2026 will lean toward a more balanced market, possibly even getting buyers more leverage. There's no sign of the oversupply or risky lending that caused past housing downturn. Mortgage delinquencies remain under 4%, far from crisis territory. Here's my intake for 2026. I expect inventory to continue to rise, but not enough to overwhelm the market since we're still behind on supply compared to pre-pandemic levels. Buyers will have more choices, and transactions should increase as people who've been waiting for years finally make moves. Life doesn't stay on pause forever. I believe mortgage rates could dip into the high fives, possibly even in the mid fives at times this year. If rates fall quickly, buyer demand could surge faster, then sellers can respond, pushing prices upward again. If rates decline more gradually, sellers will have time to prepare, keeping the market more balanced. For home prices, I expect steady but modest growth, likely between 1 and 3.5%. Double-digit appreciation is behind us. Affordability will remain a challenge. For sellers in Hunterdon County and throughout New Jersey, 2026 should feel more predictable than 2025, but pricing correctly and presenting your home will matter more than ever. Competition is real, and here's the wild card that could change everything. Federal Reserve leadership changes are expected in 2026. A new Fed chair could take a very different approach to rate cuts. Faster cuts could heat the market quickly. Slower cuts could cool demand further. Until that shift happens, forecasts remain just that. So that's my outlook for 2026. What do you think? Do you agree, disagree, or have a different prediction? Share your thoughts in the comments. And if you're thinking about buying or selling in Hunterdon County or nearby, I'm here to help you move forward with clarity and confidence. Let's talk anytime.